Well, I'm so glad to have you with me on today. This is going to be an absolutely great time for us today, and I am looking forward to sharing this great program with you. There's some things you've got to know. I love to help individuals align themselves properly with their credit, business, career, life, so that the money can finally flow. So today, that's what we're going to be doing in this live, and I'm excited that you have joined us. So we want you to come on in, and let's get a great opportunity to share some wonderful things with you on today that are going to be happening right around your life. And if you are unaware, they're going to catch you, they're going to trap you, they're going to hurt you, and that is what we do not want to happen to you. So I'm extremely excited that you've joined us. I'm going to get right into it. And if you're watching this live or if you are watching the replay, this is critical. I want to ask you a real question. Have you ever applied for credit, a credit card, a car loan, a business line, and got denied, or hit with a crazy interest rate, even though you pay your bills on time? I absolutely know the feeling. You thought you did everything right, and the bank still said no. Here's the truth. The bank didn't make a mistake. They used the system exactly as the system was designed. Well, today I'm going to pull back the curtain on 5 specific mechanisms that banks and lenders use against you every single time you apply. Listen, and most people, and I mean most people, don't even know these exist. Here's what we're going to cover today: FICO 10T, trended data, debt to income ratio, the personal guarantee trap, and utilization patterns. These 5 things are running right now on every application you submit. Now, I want you to do me a favor and drop a Y in the chat or as a comment if you've ever been denied despite paying on time. Now, this is important, and we've got to know why these 5 right now, because if we don't, we're going to get caught. Banks didn't just change the rules. They upgraded the entire system. Most consumers are still playing 2015 ball. Same habits, same strategies, but the game has completely changed. So these aren't tips. These aren't tricks. These are the mechanisms the system runs on. The truth of the matter is this: the system didn't get harder, it simply got smarter. And if you're still playing the old game, you're losing and you don't even know it. So let's break these down one by one, and I want you to think about which one has been hitting you. So let's get into it. So the first one that I want you to get straight. This is number 1, FICO 10T, the newest FICO scoring model. Lenders are adapting this one right now, and it's affecting people as we speak. Here's what makes it different from the old model. The old model took a snapshot, one moment in time. You had a bad month, score dipped, you fixed it, score came back. FICO 10T is not a snapshot. It's a video. It tracks your credit behavior over time, not just what your score looks like today, but the pattern of what you've been doing for the last 24 months. So that one bad month, that's now part of your trend line, and recovery takes longer because the model sees the pattern, not just the number. Banks can use FICO 10T to justify higher rates or denials, even when your current score looks fine. And trust me, I just saw this happen to someone yesterday. Same person, same number, but different positioning. And that positioning cost you money. Now, consistency beats spikes. Stop the habit of paying everything off at the end of the month and moving to small, consistent, mid-cycle payments. And ask your lender which FICO model they pull. If it's 10T, your whole strategy has to change immediately. The old model was a photograph. FICO 10T is a video, and the bank is watching the whole reel. This is important. This is important. Type a 10T in the chat if your lender has ever told you which FICO model they pull, because most people absolutely will never hear a word about what model the lender is pulling. Let's look at this now. Number 2, this is important. Trended data. Credit bureaus now report your month-by-month payment and balance history, not just your current statistics, the last 24 months. Let me show you how this works against you. You pay off a car today. Your score should go up, right? Makes sense. You did the right thing. Not with trended data. The model sees you've been carrying high balances for the last 18 months. One payoff doesn't erase that trend. Banks interpret that trend as risk behavior, even if you're doing the right thing right now. Here's the real reason. Credit scores don't just respond to effort. They respond to data patterns. And trended data means the bank is reading your entire history, not just today's headline. So here's the fix. Gradual reduction beats sudden payoff. Lower balances consistently over 3 to 4 months rather than one big lump sum. You want the trend line to tell a story of stability. Banks are reading the narrative, not just the last page. You've got to get this. They're reading the narrative, not just the last page. So now they're paying attention to the trend. You must pay attention to the trend. Now, let's keep it moving. Number 3, and this is important, debt to income ratio. This is the number nobody teaches you to watch. And it might be the most dangerous one on this list. Here's what it is. Take your total monthly debt payments. Divide that by your gross monthly income. That's your DTI. Lenders use that number to decide if you can afford more debt. Here's where it gets absolutely crazy. You can have a 750 credit score and still get denied if your DTI is above 36 to 43%. And here's the trap. Banks push you to take on more credit. Pre-approved offers, limit increases, feel like a reward, right? But it's not a reward. It's a hook. They're expanding your exposure so they can use the same exposure against you when you apply for the thing you actually need. And most people never calculate their own DTI. So they walk into applications completely blind. This is something you cannot do. Here is your fix. Know your number before you apply. Calculate it yourself every month. Pay down installment loans strategically, cars, personal loans. Reducing installment debt improves your DTI. I'm going to say that again. Reducing installment debt improves your DTI faster than paying down revolving credit. So what does that mean? That means if you reduce your car loans, your mortgages, it's going to help your DTI faster than paying down credit cards. And stop accepting every credit limit increase. That's not a gift. Some of these increases are ammunition they will use against you later if you are not on top of what is going on right now. All right, this is important. If you don't understand it, you're going to get caught in this trap. And I don't want you caught in the trap. So we're going to move forward. Now, I want to say something specifically to my business owners for just a minute. If you own a business or you're building one, lean in close. This one is serious. Number 4, the personal guarantee trap. You applied for business credit, business cards, business line, business loan, and the lender slipped in a personal guarantee. Most people sign it without reading it closely because they think it's for the business. But here's what that personal guarantee actually means. Your personal credit is now on the hook for business debt. That business card reporting to your personal file, destroying your personal utilization ratio overnight. A late payment on that business card, it hits your personal score. You think you're building business credit, but you're actually multiplying personal exposure. And here's the double punch. That business debt counts against your personal DTI as well. So now you've got two problems from one account. And the trended data now in play. If your business card balances spike, that spike becomes part of your 24-month personal trend line. It doesn't just hit you once. It follows you for 2 years. This is important. So here is the 3-step business credit firewall. Step 1, only apply with lenders that report to business bureaus like Dun & Bradstreet, Experian Business, Equifax Business, not to your personal file. Ask that question before you sign anything. Step 2, build your DUNS number and Experian Business and Equifax Business file first. Establish the business as its own credit entity. Before you go seeking larger lines, you've got to put this in place. And step 3, never sign a personal guarantee without asking this one question. Does this report to my personal credit file? If they answer yes, walk away or renegotiate before you sign. Here's something you got to know about guarantees. There's 3 levels to get. First, there is unlimited guarantee. You're totally responsible for everything. Then there is limited guarantee, meaning there's limits. There's a ceiling limit and there's a time limit. And then there is no personal guarantee at all. So renegotiate before you sign. This is critical. Credit isn't just about borrowing money. It's about positioning yourself for opportunity. And if your business debt is secretly destroying your personal position, you don't have a business. You have a liability with your name on it. Remember, FICO 10T reads the trend. Trended data holds the history, and the personal guarantee is where it all collapses into your personal life. This is important. Do me a favor, if you're a business owner, I need you to respond to this. Business owners, drop a PG in the chat if you've ever signed a personal guarantee. Let me see how many of us have been caught in this trap. This is very, very critical that you get it and do not allow yourself to be stuck here. Now, let's go to number 5, utilization patterns. Bank don't just see how much you owe. They see how you use it. This is important. Banks don't just see how much you owe. They see how you use it. Here's what I mean. You max out a card mid-month. You pay it off on the due date. You think, I paid in full, I'm good. But here's what the bank actually saw. On the day your statement closed, your balance was high. That's the number that got reported to the bureaus, not the zero balance after you paid. Banks also separate people into 2 categories. Transactors, people who pay in full every month, and revolvers, people who carry a balance. They price you differently based on which pattern you show. And with trended data in play, if you've been a revolver who just paid off for the first time, the bank doesn't reward you immediately. They just watch. They wait to see if it's a trend. Most often, because people are not aware, it's not a trend. It's a one-off, and the bank simply ignores it. This is important. Here's the fix. 3 moves. The 1% rule. Let one card report a tiny balance, 4 to 7%. All other cards must be under 1%, preferably 0. That single small balance signals responsible use. But you must pay before the statement closes, not by the due date. Before the statement date. Timing beats amount every single time. I'll say it again. Timing beats amount every single time. Stop the max and payoff cycle. It looks erratic to the new models. Even if you're paying it off, the pattern tells a story, and it's not the story you want. So make sure it's the right story. Same person, same habits, different positioning. And that positioning made all the difference. This is critical, and it's important if you're going to be successful. Now, there's something we've got to recap and make sure we get this. Let me bring it all together for you. FICO 10T. It's a video, not a photograph. Consistency beats spikes. Trended data. They read the last 24 months, not just today. Your pattern is your score. DTI, debt to income. The number nobody teaches you to watch. Calculate it yourself before they do. Personal guarantee. Firewall your business from your personal file. Ask first, sign second, or don't sign at all. Utilization patterns. When you pay matters more than how much you pay. Time it right. Tell the right story. This is important. Now listen, all 5 of these work together. FICO 10T reads the trend. Trended data provides the history. DTI measures your capacity. Utilization shows your pattern. And the personal guarantee is where it all collapses into your personal life if you're a business owner. This isn't 5 separate problems. It's one system. And once you understand the system, you stop being a victim of the system. This is important. Everything we've talked about today, FICO 10T, trended data, DTI, personal guarantee, utilization, that's the credit pillar. But credit is just one piece. The CBLF Blueprint connects 3 things: credit, business or career, and life. When those 3 are aligned, money flows. If you're a business owner, funding opens up. If you're an individual, opportunities for increased credit scores, credit limits, things get to moving in your favor. Opportunities find you. If you're ready to stop guessing and start positioning, you've got to apply what you're getting today, right now in your life. You have got to be aware that the credit system is simply after your unorganized money. They want to make sure that they've got such a great structure in place that you will simply keep operating like you were operating 5 years ago, and they will be taking opportunity away from you 5 years in the future. Let's position ourselves now so that not only are we aware, but we are operating with that awareness. If you're ready to stop guessing and start positioning, stop guessing and start positioning. I want to work with you directly. Listen, I've got links in the description for you to book a consultation if you are a business owner looking for funding. If you are an individual with credit issues, you're messed up right now, your scores are a 4, a 5, a 6, and you want to get yourself ahead, you should check out this description today. Let's build your blueprint. This is important if you're going to get where you want to be. Here's what I want you to remember. The system is not broken. It's built to work a certain way. And once you understand how it's built, you stop fighting it and you start positioning yourself to win. That's why I'm here, to help entrepreneurs and individuals align credit, how you make your money and your life, so that the money can finally begin to flow in your life. Listen, I want you to be blessed. I want you to have an awesome rest of this day and this week. No matter when you're seeing this, it's the right time to take notes, to apply yourself, and to say, aha, I know something now that I didn't know before. Be blessed. I look forward to seeing you again real soon. Take care.